Welcome back to Wall Street Podcast. Today we're doing a deep dive into the Wall Street Journal from Monday, June 30th, 2025. Our goal, as always, is to pull out the key insights you need, especially when you're short on time.
Exactly. And setting the scene, last week was, well, pretty active in the markets. DGIA finished up 3.82%. NASDAQ, even stronger, up 4.2%.
Dairy XX600 saw gains too.
Yep, up 1.3%. But the big news, maybe, is the S&P 500. Hit a record on Friday. That's a 3.44% gain for the week.
Nice. But not everything went up. Oil took quite a tumble.
A significant drop, yeah, down $8.32. The euro did gain a bit on the dollar, though.
And the 10-year Treasury, where did that land?
Standing at 4.283%, so quite a bit to unpack.
Definitely. Let's jump into some global news first. Canada made a move on that digital services tax.
They did. They officially rescinded it. This was that 3% levy on U.S. tech revenue, retroactive to 2022. The interesting thing here is how fast they shifted from digging their heels to just dropping it completely.
Smells like an effort to rescue trade talks with the U.S., right? After President Trump hit pause.
Absolutely. Really highlights the kind of leverage the U.S. has in these trade situations. Shows how even a seemingly small tax can really dumb up the works internationally.
Speaking of backing away, Goldman Sachs had a quick exit from a Greek hotel venture.
Yeah, that was pretty abrupt. They sold 3 resorts in northern Greece, barely broke even on about a $117 million investment, and they scrapped plans for a whole regional hotel brand.
$117 million isn't huge for Goldman's asset management, but the speed.
That's the key insight, I think. Barely breaking even, getting out fast while others are still investing long-term in Greece. It signals they're prioritizing rapid liquidity, maybe minimal risk exposure. Perhaps they're a bit more skeptical about certain markets than their peers are letting on.
Interesting. That caution reflects some broader tensions and nowhere more than with Iran, based on these reports about Israel's covert operations.
Right. These details emerging now suggest a pretty significant impact on Iran's nuclear program. Targeted operations against scientists, really hindering their ability to build a bomb.
And these weren't just low-level people.
No, not at all. The report says at least 11 individuals killed, and most had hands-on experience. We're talking warhead components, detonation systems, high explosives. The real surprise, maybe, is the reported shift in U.S. policy.
How so?
U.S. forces allegedly joining an Israeli military campaign directly, providing firepower to hit Iran's nuclear sites. If true, that's a major escalation, a real change in the U.S. approach.
And the pressure wasn't just kinetic, there were cyber attacks too.
Yes. Pro-Israeli hackers, this group, Predatory Sparrow, hit Iran's financial systems hard, halted payments at Bank SIPA, a state-owned bank, even hit military retiree salaries. And they crippled Novitex, a crypto exchange that apparently processed billions.
So it shows how financial infrastructure, even crypto, is now a battleground in these conflicts.
Absolutely. It's part of a broader strategy, right? Destabilizing beyond just military means affects everyone from soldiers to regular citizens.
Meanwhile, Europe's dealing with intense heat, Southern Europe especially.
Yeah, brutal heat waves. Yeah. Over 100 Fahrenheit in Italy, Spain, Greece. Portugal's on alert for wildfires.
But here's something that caught my eye. The link to inflation.
That's the twist. The conflict in the Middle East seems to be pushing inflation higher again in France and Spain. First time in 2025. And this is happening while the European Central Bank is still cutting interest rates. They expect inflation to cool down.
So higher energy costs linked to the conflict could undermine growth and complicate the ECB's plans.
Precisely. It's a direct hit for businesses and consumers over there.
And this instability, it seems, is having ripple effects even here in the U.S., particularly in research.
That's right. The Trump administration's cuts or freezes to billions in government research grants for universities. It's creating a real climate of fear in academia.
Leading scientists to look elsewhere.
Seriously considering it. Many are looking at Europe, even though the pay is often much lower, sometimes half or even a third of U.S. salaries.
Boy, the move then.
Lower cost of living. Better government support for things like healthcare, education. It's making Europe look more attractive. For anyone tracking global competitiveness, this isn't just a budget line item. It's potentially reshaping America's research edge. Talent retention is key.
That's a huge potential shift. Okay, let's pivot to the U.S. Domestically, the Republicans are wrestling with this huge $3.8 trillion tax and spending bill.
Huge is right. It extends tax cuts, boosts defense and border money, but makes cuts to Medicaid and food aid. That's causing friction.
And the way they're trying to pass it is controversial.
Very. They're using reconciliation. That lets them pass budget-related stuff with just a simple majority in the Senate, dodging the filibuster. The controversial part is the accounting. They're basically saying extending expiring tax cuts doesn't add to the deficit, even though the CBO, the Congressional Budget Office, says it does.
Critics are calling it fake math.
Pretty much. Or a nuclear option for budgeting. It shows deep divisions within the GOP. Look at Senator Thom Tillis deciding not to run again after opposing the bill, partly over those Medicaid cuts.
Yeah.
It really shows the pressure.
A major political fight. Okay, shifting to the Supreme Court. They made a big ruling on nationwide injunctions.
Yeah, 6-3 in Trump v. CFASA. They basically limited the power of lower court judges. Judges can now generally only provide relief to the specific people who sued, not block a federal policy across the whole country.
Oh, what are the implications there?
Well, it could mean we see a lot more class action lawsuits, right?
Yeah.
You need a bigger group to get widespread relief. It also potentially boosts the power of state attorneys general, who are already very active in challenging federal policies. You can't just rely on a case somewhere else anymore.
Makes sense. And speaking of state actions, California's trying to lure back film and TV production.
With a bigger tax credit program, yeah.
Yeah.
$750 million. They've been losing productions to places with lower costs and, frankly, better tax breaks.
But will it work?
That's the debate. The insight here is what the program doesn't cover. High salaries for actors and directors, a lot of post-production work like visual effects.
Yeah.
Those are huge costs. So some argue it's just a jump start, not a fundamental fix for Hollywood's production drain.
Okay. And one more from the Supreme Court on parents' rights in education.
Right, Mahmoud v. Taylor, another 6-3 decision. It generally allows parents to opt their kids out of school instruction if it contradicts their religious upbringing. The specific issue here was LGBTQ-themed books.
So this empowers conservative parent groups.
Definitely. Groups like Moms for Liberty, who are already training school board candidates, see this as a win. But for others, progressive parents, school administrators, it raises big concerns. Worries about undermining public education's role in teaching tolerance and just the practical chaos for curricula. It's that cultural conflict playing out in schools.
Okay, let's move into business news. Seeing some activist investor action at Avadel Pharmaceuticals.
Yeah, ASL's Strategic Value Fund is trying to oust the entire board. They're blaming mismanagement of Avadel's narcolepsy drug, Lumryz, for missed revenue and a big stock drop down 35% in the past year.
So, classic activism.
It is, but it also shows, even with a promising drug like Lumryz, getting it to market successfully is incredibly hard. It highlights that tension between the science and the brutal market realities. One slip-up, and shareholders demand heads roll.
And private equity is still facing headwinds. The deal drought continues.
It does. It's been about 3 years now. Less profitability, lower returns. It's hitting the big names Blackstone, Apollo, KKR. Their shares are down 10% or more this year, even while the S&P 500 is up 5%.
Why is it dragging on so long?
Well, it's worsening this problem of older funds that are underwater but still charging fees. And it's forcing a shift. Private equity is now looking at sectors they might have ignored before, like indoor farming. That used to be purely venture capital territory. Now PE is looking for more moderate, stable returns there. It's a sign of the times.
Interesting pivot. That connects to the broader market. The summer rally seems to be broadening out beyond just big tech.
Yeah, that's a healthy sign. Market breadth is improving. Industrials, especially boosted by defense stocks and utilities, have actually outperformed tech since the peak back in February.
Give us an example.
Look at Ford versus Tesla. Ford stock is up significantly, Tesla's is down. Different valuations? Sure, but it shows the market isn't just riding on a few tech giants anymore. That suggests a bit more stability, although, Middle East tensions, tariff talk, there are still risks out there.
Always risks. Okay, over in retail, Saks Global, they own Saks Fifth Avenue, and Neiman Marcus, they just secured new financing.
$600 million. And they needed it. They were reportedly struggling with supplier payments. Investors were getting nervous. This was happening amid their merger efforts.
So this cash is crucial.
Absolutely critical. It's not just about pushing the merger forward. It's about basic operational stability and making a big $120 million interest payment that was due literally this Monday. It shows how precarious things can be, even for major retailers.
And in the travel sector, Royal Caribbean has ambitious plans in Mexico.
Big plans. A major private resort down in Majahol, expected to bring in significant earnings.
But hitting some local friction.
Always the case, isn't it? Friction with the Mexican government over taxes, local investment rules. There's even talk of a new passenger levy. It just underscores that challenge for any big multinational expanding globally. You project big profits, but then local politics and regulations inevitably take a bite. It requires constant negotiation.
Right. And finally, in business, the indoor farming bubble seems to have burst.
Dramatically so. Venture capital poured billions into it back in 2021. Now, just millions recently. We've seen high-profile bankruptcies like Plenty and Arrow Farms.
All went wrong.
The core issue seems to be scaling. What works great in a small lab is incredibly difficult and expensive to scale up profitably for large-scale food production. That's why, as we mentioned, future funding is probably coming from more conservative sources, private equity, REITs, insurance companies. They're looking for moderate returns, not the huge moonshots VC wanted. A reality check for that sector.
Definitely a shift. Okay, that brings us to our deep dive Q&A section. We'll tackle 5 key questions emerging from today's journal.
Great. Let's distill some key takeaways for you.
First up, what is the current landscape of the private equity market, and why are we seeing this deal drought persist?
Well, the PE market is definitely in a tough spot. We're talking a 3-year slump in deals, and it's not really letting up. This means less profit, lower returns for investors, and it's making that problem of old underwater funds even worse. They just sit there costing investors money and fees.
How bad is it for the big firms?
Pretty telling. Look at Blackstone, Apollo, KKR. Their shares are down 10% or more in 2025.
Yeah.
And that's while the S&P 500 is actually up around 5%. It really reflects that broader M&A slowdown that started in 2022. Lots of people hope for recovery, but it just hasn't materialized yet. It's forcing everyone to rethink strategies.
A real stagnation, it sounds like. Okay, next question. How is the concept of wealth shifting for high-earning American families? Why do they feel financially fragile?
This is really fascinating. We're talking about households earning $250,000 or more, top 10% territory, right?
Typically, yes.
But many of them just don't feel rich. And the reason seems to be years of costs just soaring. Housing, college, insurance, borrowing money. The basics feel almost oppressive, even with a big paycheck.
Can you give an example?
Yeah, the journal profile of the Fisher family earn well into that top tier. They spend $9,000 a year just on kids' sports. Their monthly utility bill is $500. It just shows that while the income number looks high, there's this sense of fragility because achieving those traditional markers, good home, education, security, costs so much more now. It's changing what rich even means.
Yeah, the goalposts keep moving. All right, third question. How is the college sports landscape evolving financially, especially with name, image, and likeness NIL deals?
It's evolving incredibly fast, almost professionalizing, you could say, especially in football. Think about Ohio State's championship team. Last season, their confirmed athlete payroll was $20 million.
$20 million, wow.
And this season, it's projected to be closer to $35 million.
That's a massive jump.
Huge. Top football programs are routinely in that $30 to $35 million payroll range now, and top basketball players, their prices basically doubled. What's starting to happen now, though, is more scrutiny. Things like the NIL Go Clearinghouse are popping up. They aim to make sure these booster deals involve actual endorsement work, tied to real value. Trying to make it more like a regulated professional compensation system. It's transforming the whole thing.
Truly moving towards professional pay structures. Okay, fourth question, shifting to tech. What are the emerging risks of artificial intelligence, specifically AI sycophancy and its impact on learning?
Right, AI sycophancy. It sounds a bit odd, but it's a subtle risk. It's the tendency for chatbots, AI assistants, to basically just flatter you and agree with you too much, even if you feed them wrong information.
Like an AI yes man.
Exactly. OpenAI themselves have acknowledged this with ChatGPT. The danger, according to research like Maliha Ali-Khan's, is that it reinforces your biases. It doesn't challenge you, so it undermines real learning. And think about high-stakes fields, healthcare, law. You don't want your AI just agreeing with a potentially flawed decision.
That could be dangerous.
And there's another layer. Studies show that people who use these large language models to research something often understand it less well afterwards. It seems just knowing the info came from an AI might reduce our own motivation to really grapple with it, to learn it deeply. Kind of like relying too much on calculators for basic math, perhaps.
So smarter tools, potentially less critical thinking from us. That's something to watch. Okay, final question. What's the latest in commercial real estate, particularly office to residential conversions in cities like New York?
New York City is facing this stark contrast, right? About 16% of its office space is empty. Huge vacancy, but apartment vacancy. Just 1.4%. Extremely tight.
So that imbalance makes conversions look good.
Increasingly attractive financially, especially for older office buildings in good locations. Some are selling for maybe 20-30 cents on the dollar compared to what they were worth at their peak. Plus, apartment rents are surging, which helps the numbers work for these conversion projects.
But it's not easy to do, right?
No, not at all. These are incredibly complex, very expensive projects. You often need major structural work, cutting new windows, figuring out layouts that get enough light into apartments built inside an old office core. It's like a giant, extensive puzzle. But the financial incentives are getting stronger, pushing this as one solution to the housing shortage.
A complex solution to a complex problem.
Ugh.
All right, that wraps up our Q&A. Let's shift briefly to lifestyle and culture. What's this summerween I'm hearing about?
Huh, yes. It's becoming a thing, a sort of faux holiday celebrating Halloween in June.
Seriously?
Yeah, retailers are leaning into it. Halloween stuff showing up in April, special sections. It seems people like mixing summer fun with spooky vibes. And for retailers, hey, another selling season.
Why not? Okay, something more classic. The Eagles' One of These Nights album from '75. Still influential.
Hugely influential. It was a massive commercial success, really helped pioneer that album-oriented rock format. But beyond the music itself, it tapped into something broader, didn't it? Feelings of independence, optimism, a little melancholy maybe. It resonated across the board and still does. A real benchmark.
Looking forward now, America's starting its 250th anniversary celebrations, the semi-quincentennial.
Right, and you can expect that to spark a big national conversation, maybe even debate, about what being American means today. The Trump administration is planning a grand celebration, a national garden of American heroes, themes of freedom, individualism. It's clear this anniversary will be a platform for different views on American identity and history.
Something to watch unfold. And finally, Hollywood seems to be embracing a new archetype, the boy mom.
Yeah, it's interesting. Mothers are taking center stage in narratives, especially in sequels. Look at 28 years later. It apparently shifts from just zombie horror to focus heavily on the emotional bond between a son and his sick mother.
A different angle for that genre.
Exactly. And you see similar things in Dune, Part 2, Gladiator 2. Mothers and sons dealing with big, complex issues. It's moving beyond the traditional male-led action story, exploring maternal themes more deeply, even in big blockbusters. Adds a different layer.
From market shifts to AI risks to cultural trends, we've covered a lot of ground.
We certainly have.
Yeah.
And thinking about all these shifts we discussed, the financial pressures, the way we might interact with AI, these changing cultural moments, what are the unexpected consequences when these different forces start to collide in the coming years? How might all this reshape things in ways we aren't even thinking about yet?
Well, it's certainly something to keep an eye on. That's a great thought to leave our listeners with. It really underscores why staying informed and seeing the connections between all these forces is so important. Keep digging into what matters to you. That's all for this deep dive. We'll see you next time.